Hello everyone. Let's quickly go through today's market action. We'll look at SPY, QQQ, and 10-year Treasury yields, and I'll explain why the market moved the way it did today and what traders are watching next. No predictions, no hype, just price, structure, and context. First, SPY. On your screenshot, SPY is around 688.73, basically flat, minus 0.04% at that moment. The chart shows a choppy start, then a sharp push up, and right after that, a quick pullback. This is classic intraday behavior when the market gets a burst of buying, usually on a headline, a macro number, or a big liquidity window, but then price stalls and gives back part of the move. Two things to notice. The move up was fast, which means it's not a slow grind, it's an impulse. The pullback is also fast, which means sellers are active, and you're not in a one-way trend day. So SPY is not screaming risk-on trend, it's more like buyers tried, but the market is still sensitive. Now let's move to QQQ. QQQ shows a strong intraday rebound, recovering after earlier weakness and pushing back above the 610 level. This move looks impressive on the surface, but context matters. What we're seeing here is short-term relief, not structural trend change. Why? Because the rebound comes after a sharp sell-off. Volume does not suggest strong long-term accumulation, and tech remains extremely sensitive to any movement in yields. This type of price action is typical when short sellers cover positions, dip buyers step in for quick trades, and algorithms react to stabilizing bond yields. Important detail: QQQ did not reclaim prior highs, and price remains below key resistance zones formed earlier this week. So what's the takeaway? Now, TNX. On your screenshot, the 10-year yield is about 4.259%, up 0.24%, and the intraday chart shows a step-up move, basically yields climbed during the session. This is where the market logic gets interesting. If yields go up because growth expectations go up, equities can still rally. But if yields go up because the market reprices rates higher or inflation risk, that can pressure tech. Yet your QQQ chart is green and holding up while yields are also up. That combination suggests the market is not panicking about rates right now, or the yield move is not aggressive enough to kill the tech bounce. Let's summarize today's message. TNX is cooling, not breaking down. Rates remain the key risk factor. QQQ is bouncing, but this is short-term relief, not trend confirmation. SPY is stable, signaling consolidation, not fear. The market today is not bullish, not bearish, it's tactical. This is an environment where chasing breakouts is dangerous, over-leveraging is punished, and patience and discipline matter most. Until we see either a clear breakdown in yields or strong confirmation in equities, expect range-bound, fast, and unforgiving price action. Thanks for watching, and as always, trade the structure, not the noise.